Let's build a better world for investing.
Let's always put our clients' needs above our own.
Let's have honest conversations.
Let's have candid debates about what retirement savings really means.
Let's dispel false hopes
and build real dreams.
Let's stand by our clients' side as the world around them changes.
Let's have the courage to take the long view.
Let's hold ourselves to a higher standard of ethics.
Let's build a better world for investing.
One charter holder at a time.
That's what we do. That's what I do.
That's what I do every day.
I am a CFA charter holder.
I am a CFA charter holder.
I'm a CFA charter holder.
I am a CFA charter holder.
I measure up.
I measure up.
My name is Ding Shua.
My name is Ganesh Sundar.
My name is Kyoko Narita.
My name is Paul Smith.
제 이름은 송진희입니다.
And I'm building a better world for investing.
CFA Institute. Let's measure up.
Good day and a warm welcome to the discussion on gaining an edge in the post-COVID investment industry, jointly organized by the CFA Institute and the Hindu BusinessLine. The importance of the subject matter of today's discussion is very clear from the overwhelming registrations and the pre-event questions that we have received. Increasing income levels and booming markets is drawing more investors to financial assets. Rising variety and complexity of investment products are giving rise to the need for specialist professionals with niche skills. This makes investment management a lucrative career option for young professionals. To tell us what it takes to get a break into this world and succeed in the business of managing money, we have four eminent panelists joining us today. Mr. Vidhu Shekhar, Country Head India, CFA Institute, a seasoned finance and investment professional with over 30 years of experience in the debt and equity markets. Mr. Saurabh Mukherjee, founder and CIO of Marcellus Investment Managers, author of 4 best-selling books and a fellow of the prestigious Royal Society of Arts. Ms. Nisha Awasthi, Managing Director and Head of Human Resources for BlackRock India. Nisha is a finance professional who has also worked in roles involving data and analytics at BlackRock. Finally, Mr. Vaibhav Jain, Head Strategic Partnerships and Sales at Wealth Desk. Vaibhav also comes with experience in private wealth management as well as investment banking. A warm welcome to all our panelists. Looking forward to a fruitful discussion today on the industry, its demands, and what's in store for the future. Let's get started right away with Mr. Vidhu Shekhar for the opening remarks. Vidhu, hi, welcome.
Thank you, Vardhini. Thank you for having me on this call.
Yes. Vidhu, you've seen the investment profession evolve over the last many years. How wide is the playing field for the young professionals who are looking for a career here?
Thanks. I suppose we have a diverse audience here today, people who are young, not so young, who are aspiring to enter the industry and who are already part of the industry. So, I will keep my answer very generic so that even if you're just trying to feel your way around, where to go. So this is like most of the industries that we work in today's times. It's a complex ecosystem. It's an evolving ecosystem. There are lots of different types of companies, lots of different types of roles. There is something for any type of personality with all kinds of aspirations. So it's a very interesting field, the investment industry. I would, at the beginning, we can talk a little bit more as we go along. Just give you three phrases and maybe a fourth one, to get us started. The first is asset management, right? Asset management, all of us know that we've all seen the mutual fund Sahi Hai campaigns, right? So we all know what mutual fund companies are. Asset management is the core of the investment industry where financial assets are managed. And you will see that there are all kinds of different types of financial assets, equities, fixed income, commodities, private equity, real estate, and so on. But essentially what all these companies do, the people working in these companies do, is manage the investments of that type. The second phrase to remember is wealth management. Now, often the customers of asset management companies are wealth management companies. Asset management companies also serve direct investors, but the wealth management companies serve people like you and me who are trying to invest their savings for the future. So the task that is being done by wealth management companies is asset allocation, trying to understand what is your need, what kind of risks you can take, what kind of portfolios that you will need, and then go and hire and decide where to invest through the asset management companies, right? So asset management companies and the wealth management company. And then there are companies which are called asset owners. These are the pension funds, the insurance companies, the companies which are holding money in trust or in fiduciary trust for you. These are companies, again, which are customers of asset management companies. Once you talk about these three core types of companies, then you have lots and lots of other companies like rating agencies, like consulting firms, people who do performance comparisons and analytics and so on. Lots of different companies. So essentially, you will find that roles in this industry can be divided into investment recommendations, investment actions, investment analysis, lots and lots of analyst roles, lots of advisory roles, lots of fund management roles.
Yeah, that's great. That's really, really wide. So we'll probably narrow down into three other areas from which we have specialists on the panel today. So let me get started with Saurabh, who was and continues to be in equity research, which is the very heart of the industry. From an economics background, he has moved into this area and it has taken him places. Saurabh, what does equity research actually involve, and how do you build a career in equity research?
Thanks, Vardhani. Thanks for inviting me the Sunday morning to this show. I would say all research, not just equity research, whether it's equity research or research into fixed income instruments or say target analysis in the context of corporate finance. I think all research broadly has three parts to it. The first is understanding the status quo, right? So if you're looking at a company, understanding the last 10, 15 years of annual reports, how has the company built itself, how has capital been allocated, how have cash flows been generated over the last 10, 15 years. So this is the stuff that's traditional, say, business school, or this is the stuff that the CFA charter teaches very, very nicely. How do you understand the world as it stands today in the case of the instrument that you're focusing on? The second part, and this is the part where the good analysts start pulling away from the ordinary analysts. The second part is seeing the world of tomorrow with a different set of lenses compared to the average analyst, right? So can you bring to bear insights from psychology, insights from technology, insights from economic history? Can you bring those to bear and see the world very differently compared to what the rest of the market will see that asset? And the third is, and this is where the third piece I would say is really where the outstanding analysts in any country, in any field stand out totally above, head and shoulders above the rest of the market is, can you take complexity and simplify it when you communicate it to your audience? Your audience could be your boss, your audience could be your clients, your audience could be the entire world. The best analysts you'll see will take a very complex subject and simplify it and communicate it very effectively to the rest of the world. So step one, status quo analysis. That's the basic hygiene. If you can't do that, it's difficult to succeed as a analyst in any field of finance. Step two, seeing the world differently, seeing the world with unusual perspectives, original perspectives. And step three, simplifying complexity and communicating it effectively to the world at large.
Okay, that's great. Weber, you come from a very different background, isn't it? In the few years, probably less than a decade that you have worked, you've moved from book running IPOs at Deutsche Bank to wealth management, something which Vidhu spoke about. You did wealth management at Edelweiss for HNIs, and then you are into the most happening space, which is fintech right now. And there, I think it's a specialization in small case investing. So how would you differentiate each of these roles, Weber? What does it entail?
Thanks, Vardhini, for inviting me. And just to add to that, I also worked about 2 years into a data analytics company before my MBA. So that was pre-MBA. So completely diverse. And I agree with you. I mean, it has been completely diverse set. So what I believe, Vardhini, is, and I don't know how many people will agree to it, but I have always believed in flexibility and upskilling yourself, right? So after my MBA, I thought, okay, I have to do finance because I was already completed my CFA. I was doing my MBA in finance. So investment banking was the first thing which, the B school guys want to get into. And I actually was lucky to get into Deutsche Bank and did investment banking for about 4.5 to 5 years. But then gradually I realized that the potential in wealth space in India is going to be huge, and I've always advocated a lot of these young guys also that always think about 5 to 10 years ahead if you're planning for your career, not what is currently going on. So with that aspect, I thought, let me move out of IB and then join private banking space. So again, I got into Edelweiss and did private banking. And after doing about 2.5 to 3 years of that thing, I was noticing that obviously the entire industry, not only finance, not only investment industry, but everything is moving towards tech. And gradually, tech will be there in all the industries available. And because I was into the wealth space, wealth tech was gaining prominence. I thought, why not do something into the wealth space? So this company where I am heading partnerships and sales, which is called WealthDesk, is basically creating a technology platform where we are, getting the retail investors that kind of a portfolios which an HNI will be getting through a PMS or AIF. A lot of scope in this field over there. And you asked that what are the differences, skills in all these fields. So basically in IB, when you need analytical financial modeling skills, Excel skills, private banking, you need a kind of a sales skills and kind of a behavioral aspects of the thing, knowing the client well, understanding his requirements, and then gradually suggesting him products. So basically it's kind of a soft skills aspect which is more needed rather than along with the financial skills, the hard skills which already is needed. And when I've joined the fintech space, obviously you need to know a little bit of technology front, because this is where the world is moving. Luckily, I am a computer science engineer, so although I had left coding and all a decade back, but then it's easy to pick once something you have done in the past. So this is what it is, and it was not easy in the initial level to actually get into learning new stuff, but with job, with work, you kind of start learning, and I love challenges, so that is how it has been for me.
Okay, that's great. So young professionals can probably look up to you to explore what they would like to before they settle down in a particular vertical. Yeah. So Nisha, so Weber has probably inside the finance space, he has moved from one segment to another. But looking at your profile, you began as a financial analyst and then moved to analytics, and now you are in HR, and you've progressed vertically as well, to being the managing director at BlackRock right now. So that's quite diverse, isn't it, for a finance profession? So would you say that a qualification in finance helps one climb up the corporate ladder as well, doing diverse roles?
Thanks, Vardhini. And good afternoon, everyone. I'm extremely excited to be a part of this conversation on a good Sunday. It gives me an opportunity to touch careers of young professionals, with this effort. To your question, Vardhini, I feel finance is a very diversified field, and its application is deeply penetrated across industries, and hence what Vidhu mentioned, it lays enormous career opportunities as well. Reflecting on my career journey, I feel it's important to hold an expertise in a particular field of subject before you actually go and grow your knowledge horizontally. you could be a finance professional. You may not necessarily have a finance degree, but you can be an engineer or could be an arts person. But as young professionals entering into the industry, I would say that give yourself enough time and commitment to go deeper and stronger on the field of business that actually leverages your strengths. And once you've developed that, then experiment a bit, take a little risk to explore your inner potential, and you could be surprised you can do a lot more than what you thought before you actually find your North Star and head towards that. I spent my initial 12 years in core finance. I got the expertise on valuations and investment, worked on various types of client assignments and businesses to understand the complexity, the vastness of what all finance can actually help clients and investors across the globe. I tested my knowledge as I was going through this in different scenarios and continue to deepen the experience. And that's what I mean when you have to really bring a very, very strong strength, a deeper strength on particular subject. When you start your career, you're at the bottom of this funnel. And then you add more volume, from understanding the subject, you execute multiple assignments, and then start to lead projects, do project management. You learn and understand various aspects of project management, team management. You grow and you gain leadership qualities, and you start to build strategies across various projects and assignments. That requires time and something that's not done quickly over a period of time. And that's where we have to be very invested into the core of while we're starting at the career. Adding analytics in my career, that was a natural growth given how the industry was evolving, and you got to evolve too. With the mention of technology in the finance space, how that disrupted and the evolution that happened, I think moving to analytics was a natural way of growing my expertise and building more into this space. Lastly, moving to HR was definitely was aligned with my purpose, and I also wanted to expand my professional portfolio. But as you think about your career over years of your professional journey, test on the hypothesis of future growth. Use your mini successes in the past, validations from the past of what has worked, and what is that something is your calling that brings your best strength and best capabilities out, and hence try to diversify, try to increase the volume of your funnel as you go up to the career. So I do feel career journey is related to a very famous saying that says that don't afraid to give up the good to go for the great. And that's how I reflect my journey.
Okay, that's great. Very well put, Nisha. So the other thing I thought we can round off this first round of discussion is with this question, which is probably on every finance student's mind. So should I go abroad or should I be in India? So I would like the perspective of some of the panelists on how different is it for working for global companies versus Indian companies in this profession.
Look, I'll volunteer my thoughts on it if it helps.
Yes, please.
So I get a little perplexed at this whole dichotomy. I've never quite understood the dichotomy. I've lived in the UK half my life and in India half my life. And honestly, I find that this whole notion of global versus Indian is simply non-existent. So suppose you were a tech professional, would you call TCS an Indian company, or is it a global company given that it has, I think, offices in 60 companies? Is Accenture a global company, or is Accenture an Indian company? Accenture is as many people in India as TCS does. So which is a global company, which is an Indian company? I'm sure, say, multinationals like Nisha's firm will have tens of thousands of employees in India. Are they a global company or an Indian company? We are hosting this discussion. You guys are hosting this discussion on Zoom. I presume tens of millions of people are using Zoom in India. I think for companies like Facebook, India will be one of their largest install bases. So this distinction, I think, is specious. What I think is relevant is the part of the world where you have grown up in, your upbringing, your identity. Does it give you unique perspectives? So if you've grown up in India, you have unique perspectives on one of the world's fastest growing economies. how can you leverage that, especially in the early part of your career, to build a successful career? Now, if you've grown up in India and you have unique perspectives in India, and obviously you decide that you want to go and work abroad, to my mind, you lose some of the singularity, some of the originality that you have. And successful careers increasingly are based on singularity, the originality of your thought. If you want to go and get yourself a cookie cutter qualification, tens of thousands of others are doing that as well. So if you want to stand out in what are very competitive fields, it's your originality, your uniqueness, which will make you stand out. So if you've grown up in Chennai or Bangalore, you will have unique perspectives on certain parts of the Indian economy. Can you use that, especially in the early parts of your career, to get yourself established? Or do you really want to go abroad to the other end of the world, get a cookie cutter qualification, and join the rat race with tens of thousands of others from whom you are no more or less distinguished? So I think I would invert the question, Vardhini, and I would especially urge people out there not to get lost in these specious distinctions between global and Indian. And if I look at, say, the CFA Institute, is CFA a global qualification or CFA an Indian qualification? I would suspect Vidhu will say CFA is as Indian as any other qualification. And if he said that, I would strongly support him in that argument.
Okay. So you say it doesn't matter, so we should make the best use of our backgrounds and our perspectives.
I think it's a point I feel very passionate about. There's a whole cadre of people out there trying to draw specious, false, artificial distinctions between what is global and what is Indian. These distinctions are damaging. They help no one. The more constructive way to think about your identity is what makes me unique. What perspectives in life do I have that are unique, and how can I use that, especially in the early stages of my career, to build an identity in the employment market, which allows the employer to see me for who I am, a human being, rather than a MBA, rather than a qualification holder.
Sure. So I think that was a good summing up of what the industry entails and how.
Can I add something, Vardhini?
Yes, please.
To what Saurabh said, I think this is very insightful. So see, we use another term called multi-local. Okay, so you have to be global, but you also have to understand the local nuances. Or if you're operating in a particular market, you need to understand that. And within the CFA world, lately we have been using the pizza analogy. That is, we have a pizza base, which the CFA credential gives you, but you are operating in a particular type of asset class. You're operating in a particular country. So that's your toppings and the sauce or whatever you put onto it, right? So you need the base, but you have to bring your own sauce. And then, to use Saurabh's word, right? It's a nice pizza which you will enjoy, and that's the way we see.
So everyone has a secret sauce. Yes. Okay, that's great. So I think students are.
I'm also urging to add to this topic, and I do feel I completely agree with what Saurabh mentioned. You should not really be bogged down with the thinking of, hey, I'm working for an Indian company versus a multinational. But I do feel that as you start your career in an organization, being uncomfortable about being comfortable is something that people should always keep at the watch. Like you should not be getting comfortable. I've got this company, my career is progressing. It's so important and critical to get a diverse experience in order to develop your perspective, in order to develop your thinking and personality. So I would say that not an Indian versus a global company, but certainly pick up more diverse opportunities, as you progress in your career.
Just to sum up, Vardhini, I mean, just to add the one line. So I have actually worked for both MNC, as Deutsche Bank, an Indian company, and then a startup, which is Indian based. And my data analytics company was also an MNC. So it's a mix of everything, but then 100% agreed with Saurabh. I mean, at the start of your career, for someone who is just starting, these things should not matter. And my transition was never thinking about whether I'm going into an MNC or whether I'm going into an Indian company. It just happened. And there are cultural differences, there are some process differences and all, but these things are okay. You need to get used to it, and then you need to show your uniqueness as to how you can stand out in wherever you are working.
Okay. That's great. I think it was a very fruitful discussion on the industry and what it has to offer. So I thought we'll move on to the qualifications and the skill requirements. I think Vaibhav did mention some of the skills that he, in his roles that he has done, but we can probably go a little more into that. Vidhu, I would like to ask you, like, what are the qualifications do young professionals looking for a career in finance need to pick up? And also in terms of job, what would you say is the kind of commitment required, and will there be a work-life balance, and what will be the money? These are the questions on the minds of young professionals.
So the short answer is it depends. Okay, depends on who you are, where you're coming from, what your interests are, and so on. So this is an industry where we find people coming from all kinds of different places, right? So you have chartered accountants, you have MBAs. Weber is a computer science graduate. Saurabh is London School of Economics. Is that right, Saurabh? I was a software engineer in the beginning of I had an MBA, but I was a technology manager who got interested in investing. And we have all kinds of people, we look around who somehow, for whatever reason, land up in this industry. Okay, we in India, we have this way of thinking of, okay, let me finish my education and then start my career. But real life is not like that. In fact, for the for CFA credential, what we always encourage is that you have your basic undergrad degree or whatever it is. You find work for yourself, and then while you're working, you pursue the credential, right? And it's not just for CFA; it's for other credentials as well. So that while you are learning, you are gaining the experience as well. So there is no set theme of what stream you should come from. But of course, we know that if you just go and count, you will find lots and lots of chartered accountants who have come into investing, a lot of MBAs, and so on. So lately, it's become very common for engineers. BTech plus CFA level 1 gets you into an associate level job in a multinational firm who use this as a filter. So no standard answer, absolutely no standard answer. Anybody can come in. Second question about what happens at the beginning of your career in terms of work-life balance, your choices and stuff like that. I think at the beginning, you have to be, one thing you must not prioritize is your pay package, right? Because often we find that there is no connection between what you're getting paid and what you're really getting from that first job of yours. You have to be very careful what you're doing, what you're gaining in terms of exposure, because what you do in the first few years of life, the kind of exploration, learning, etc., that happens, under whom you are doing this learning, what kind of character it's building. Those things are much more important. So I won't worry about the pay package. I would focus on what am I going to get from this job and how is it going to result in my career 3, 4, 5 years down the line.
Okay.
I don't know if this is helpful or not, but this is the way I would like people to think.
Okay. That makes sense. Nisha, you being in HR, so I thought I could ask you this. What are the key skills that you look for when you hire freshers and young finance professionals? And what do you think is lacking? See, many of them come with good credentials in terms of passing the exam on merit. But do they possess the skills? Is there a gap here?
Sure, Vardhini. I think my answer is going to be somewhat similar to what Vidhu mentioned. Different skills or competencies may be required for different roles. As an investment professional, you may like to build your career in core investments like portfolio management, investment research, analytics, or risk. Or, there's a sales side of it that fascinates you. You want to be in business management, relationship management, building business strategy, or operations or technology. I feel talent comes in many forms, and it's important to value the diverse perspective. So while hiring, we actually look for future colleagues who have varied background and education. And if you talk about specific skills, that makes you a potential hire, probably 2, 3 of them. One, how energized are you by the learning journey? Moving from a novice to a competence. We don't expect you to, know all as you start your career, but you should be excited with the learning process. So how do you demonstrate that? The second I feel is agility. We are in this environment of change, while with the global evolution, investment management industry evolving, and with the pandemic, you got to be adopting fast, you got to be changing fast. So are you willing, how do you demonstrate change, the agility across products, business, geographies, and open to pursuing new and unexpected opportunities? This should be in your stride, where you recognize that opportunities and new challenges exist out of your comfort zone. 3, I think, when you are in a professional journey, when you start your career, do you value being stretched and developed through technical, soft skills trainings and other kind of skill and upskilling? It's important to be the student of the market and the technology or the business that you're in. Learning definitely continues outside when you leave your universities as well. So are you a student all your life? And lastly, I would say being intellectually curious, challenging the status quo, pushing the boundaries, asking questions and trying to find answers is actually that, drive a very good skill set for somebody who's looking for a job. Basically, the underlying statement is hire for skills that can't be taught. So demonstrate competencies and skills that you feel that are not easier to be taught in a classroom. The second question around what I found lacking, I think the answer is very, very similar to what Vidhu mentioned. It's a very key perspective, I want to share with all the professionals is when you're at the initial year of your professional journey, don't evaluate a role, a job, or an opportunity by allocating higher weights to the compensation, the financial component of that. The experience that you get while working on a project which gives you a deep learning experience, the quality of the role, that will actually give you an advantage over a long year of time. We may be naive at the start and get attracted to higher paying roles, but apply the same investment theory of long-term gains versus short-term profits while picking up the career opportunity. It actually takes time to stay invested in an organization, build the emotional ownership or emotional connection with an organization, but that's what matters in the initial years of your career. And that's how I feel, Vardhini.
Okay, that's great. So you're saying the attitude and the willingness to learn and be flexible is more important than coming with a qualification, fixed set of ideas.
Yes,
that's great. Okay. Sort of in terms of products, the industry is growing very rapidly. So there are a variety of products. You have a PMS background, then there are real estate funds, hedge funds, structured credit products. So does this require more specialist skills in terms of developing these products and managing them? How can one pick up these skills? Do you need any additional qualifications?
I think as the other speakers have already mentioned, right? I think and it's quite interesting. Every single speaker has made this point. These skills are picked up on the job. I don't think we're any longer in a world where you need to constantly get yourself new qualifications. Once you've done your CFA charter, or say you've got your basic finance qualification, up to you how you get it. But once you've got your basic finance qualification, I think one needs to get out of this mindset that I need degrees and professional qualifications through my 20s. It's the skill building which is essential. And I think that Nisha made this point nicely. What skills you build through your 20s, what skills you build should be linked to what are the aspects of our profession that you enjoy. So if you enjoy selling, then upskilling yourselves on say transaction analysis, upskilling yourself on negotiation analysis. Sales in our profession necessarily has a significant element of negotiation, a significant element of communication, right? So upskilling yourselves in that regard makes a lot of sense. If you enjoy research, then if specific financial instruments interest you, so derivatives interest you, then upskilling yourselves on how to value derivatives, how to spot arbitrage opportunities in derivatives makes sense. If you want to bring to bear technological skills in the world of say derivatives or in the world of equity valuation, then say doing Python courses makes a lot of sense. So that aspect of learning and growing through your 20s is essential. I think every speaker has made that point. And how you how you use the wealth of learning opportunities, how you use your weekends, right, Saturday and Sundays, to upskill yourselves is central. This notion of work-life balance, I find it very curious, right? How exactly will you learn through your 20s and 30s if you're constantly striving for work-life balance? I think the 20s are an immensely important phase of your career for learning, and a big focus, I think, of any professional who wants to rise in finance should be spending their 20s intensely learning about different facets of what they're already doing, and then other areas of finance which they're not expert at but which intrigue them. So yes, there will be new asset classes which will emerge. If you want to position yourself to work in those asset classes, you need to upskill yourself. So just as an anecdote, I didn't study finance in university. I used to be a management consultant. Equity valuation intrigued me. So 3 years, during the last 3 years of my management consultancy career, I did the CFA charter, sitting in airports and airline and hotels. Once I finished the charter, I quit management consultancy and became an equity analyst. I think that sort of move that I made 20 years ago, I think, is the norm these days. The notion that you'll go to college, study a bunch of things, that'll be your career, that's yesterday's world. That's gone. We'll have 50-year careers now. We'll probably have to change careers 3 times in those 50 years. And retraining yourself constantly, reskilling yourself constantly, has to be almost as natural to you as breathing.
Okay, that's great. So you're saying learning is a lifelong experience. There's no putting an end to learning and then doing.
And weekends are meant for learning. Weekends are not meant for chilling out,
fun.
watching.
Chilling out, yeah. Okay, that's why we are here today on a Sunday. Yes. So Weber, I thought I'll bring you in on this. See, most finance people, people when the children in school, they decide they're going to go into commerce and arts and not science. The technology knowledge of technology takes a backseat then, unless like you or Vidhu, you've done your computer science engineering or your software engineering. So, but technology has become an integral part of every profession today, not only finance. So what kind of involvement and knowledge do investment professionals need to have on the technology front? Is technology dominating the industry now?
I think Saurabh also somewhere covered the technology aspect of it. And to be honest, when I did my engineering in early 2000s, there was always this kind of a notion that computer science engineering is the future. Computer science engineering is the future. And, by the time I was passing out, I said, no, it's still not the future. So obviously I migrated to finance industry because there were some topics, and I started doing CFA. So that intrigued me, just like Saurabh mentioned, for him for the equity research kind of a thing. So I'm kind of transitioned to finance. But now what I have been noticing in the last 4-5 years, and what you are saying is correct. I mean, the technology is dominating now, and that how things are moving, it will continue to dominate. It will continue to, industries will get automated. Even I was getting a feeling that even investment banking industry can be, a lot of parts can be automated for that. So that is very important. So if you had asked me that how important for someone to learn about technology is 3-4 years back, I would have said, yeah, working knowledge should be there. But with time, I think someone needs to be upskilling. Everybody needs to be upskilling himself or herself over the weekends or whenever weekdays for the technology aspect. A lot of guys come to me and say that I've not done engineering. I've never studied coding and computer science, but I've always he's a CA or a BCom student. So how should I, go about that? I'm not saying everybody should be learning coding, but the application, the algorithm, these things should be understandable. And it's not only the kind of, coding part of it, but then there are a lot of things like APIs and this and that. At least the terminology should be understandable to everybody. And when I say this, see, today IITians are actually making the fintech apps, right? They are learning finance without doing an MBA or without doing a CFA. If a coder, if a computer science engineer can learn finance, why can't kind of a finance student learn a little bit of technology, right? So today you need to have a lot of, you have to be a master of one, but then you need to be a jack of a little more trades.
Okay. So technology is inevitable, and we
you can't avoid
students. Yeah. So we need to get comfortable with it.
And earlier you pick it up in your 20s, it's better, no, rather than someone who is picking up in 35 or 40 years at that point.
So Weber, since you come from this fintech startup kind of a background, so do you typically think that It's an all-in-one kind of a role for a finance professional in terms of being familiar with the technologies.
So see, there are a lot of aspects to it, and when I said initially that I did investment banking initially, where I was kind of getting familiar with the finance stuff, but then I realized that even sales is important, because whatever service or product it is, until and unless you market it and sell it, it's not going to make sense. And now the technology aspect also comes into play, because the industry is moving towards it. Another aspect comes into play is basically doing the regulations, doing the compliance. Basically, this is a startup, so here I am doing a lot of kind of a lot of stuff around so many aspects. But then I think today it is the time that you need to be, as I said, you need to be good at some skills, but you need to be aware about lot of other aspects as well. So whatever the product is, services, these things are required.
Okay. You're saying it's evolving into being more broad-based and being comfortable.
Yeah.
Okay.
Can I make a point here?
Yes.
I think it's important, and we don't want to scare non-technical people about learning to this new skill set. But it's important to understand that technology is becoming more and more important. There are two key things. One is there's a lot of data being created in the last 5 to 10 years that it has been in previous years. So when you have data, you really would like to use that data to your advantage to make more informed decisions, generate some analytics which helps you be better in investment results. So I think one is that. And second is digitization. You look at, I'm sure all the people who logged into today's session, everybody will be on smartphones using digital apps and are very familiar. We don't like to fill a form, with a pen and paper. We would like to do that online. So with those two key things, I feel investment industry has also seen a huge evolution, the adoption of technology in there. And for people who are non-engineers, I'm myself a non-engineer. I've led an analytics team for many years, full of engineers. But I think it's important that you, as a finance professional, you stay close to technology. You should understand its application. You should understand where you can use technology to your advantage. Automation is one big piece that's picking up really a lot after the pandemic has set in. And if not be an engineer, you can always do courses which actually teach you technology and its application and its uses. So don't be scared away, oh my God, now I have to learn programming, I have to learn, creating and crafting, coding, etc. But just make sure that this is a very important part as you go into the investment industry.
Okay, point taken. So you'd mentioned the pandemic. So I thought we'd have a round of discussion on, what the future holds, because the pandemic has changed the way a lot of industries function. So Vidhu, would you like to tell us how resilient has the investment industry been to this pandemic, and what are the growth drivers that you see going forward?
Thanks, Vardhini. But before I answer your question, I realize that a lot of our discussion has been very philosophical and uncle type advice. So, if you want real information, there are many sources available out there, and I would recommend on the CFA Society YouTube channel, we have this series of career webinars. Okay, so these are 1 hour webinars in which we pick up one topic, like say, jobs in a rating agency, right? What does a rating agency do? What kind of jobs are there? What competencies you need, and so on. So I'd recommend that you go in and go take a look at those. We've done a series of these so that those who came, probably if you came here looking for actual understanding of what a particular piece of the industry works, how it works, and we are not giving you that, and you're feeling disappointed, please go and take a look at those career webinars, and maybe there are other resources out there as well. And now we'll switch back to the philosophy. Yeah, so COVID, right? So I mean, it is this is a question that is being asked everywhere, not just for industries, but for individual, for self. How is my life changing? My life is not going to be the same post-COVID as it was pre-COVID. Many of my cousins, for instance, a few of them, they've decided that, they've been working in the US for decades now. Well, now is the time. Suddenly seen that their parents are alone, and a decision which was very hard for them to uproot themselves from a comfortable surrounding, come back and try something back home. They're doing those things. So at the individual level, at the firm level, at the system level, everything is changing, and the total impact of this change will become, we will understand that only over time. But if you look at the function of the investment industry, right? What are we trying to do? We are trying to help people to invest their savings, so that they can achieve their lifetime goals. That still remains, right? And in a country like India, when people are moving out of poverty into the middle classes, people are moving from middle class to upper middle class, and so on. Income levels are rising. There is a switch going on from physical assets to financial assets, and as income levels rise, wealth will rise with a lag, right? So this industry is going to really grow. If you look at the macro big picture sense, and anybody who is entering the industry now or has just come in here, we don't know what the industry is going to look like, but we can be absolutely sure that the industry will be around, and it has to keep serving the people, and it's going to create lots and lots of jobs. So I would leave it at that, and maybe let the others chime in as to what specific changes we expect to see in a post-COVID world. But don't be disheartened that your industry is going to disappear. Your industry is never going to disappear, and it's going to become more and more important with time.
There were a lot of pre-event questions on the impact of AI and machine learning in investment management. So how is it going to change the future? So the participants were worried if human skills would be replaced by machines in this business.
I think the answer to that, Vardhini, I think we've discussed this before, that the answer to what AI and ML will do is it's similar to what spreadsheets did. I don't think there were too many people in finance who in say 1985 would know how to use spreadsheets. I think actually Excel, I don't think existed then. I think it was Lotus 123 that existed in 1985. And I don't think there was anybody in finance who didn't know how to use spreadsheets by the turn of the century. So in that 15-year period, if you wanted to have a career, whether in corporate finance or in equity research or in bond valuation, you needed to learn how to use spreadsheets. I think it's exactly the same with AI and ML. It's a bit of a novelty even today. I don't think 10 years hence it'll be a novelty. Do people who are watching this, should they go and figure out how to build basic coding skills and then understand how AI works? Absolutely, they should. Will that transform your career? I'm not sure it will, but do you need to know how coding and AI works? You need to do it. You need to do it yourself, and you need to do it yesterday morning. And this is, I think, the point I think our other panelists have made repeatedly. You need to understand how different other disciplines interplay with finance. So technology and finance are interplaying with each other. And if you don't understand that interplay, you are at a disadvantage. Now, will it be a different finance profession that will emerge in the post-AI world? Elements of it obviously will be different. So let's take an example. The Black-Scholes valuation itself was created in the 70s, but I think it was around 1981-82 that was put into both computer programs and into calculators as a default. So there are, in fact, the CFA exam calculator has a Black-Scholes default calculation that in turn transformed how derivatives were valued. Because as soon as you made it easy for the average person to value a derivative, to value an option, as soon as you made it easy for an average person to value an option, you took away the arbitrage opportunities from the option market. Similarly, once AI starts becoming a default learning for finance professionals, there will be types of arbitrage, there will be types of valuation anomalies, which will disappear from finance, and new opportunities will emerge. So I'm not so sure you and I should spend too much time agonizing about what will come and what will disappear. What I think all of us should be clear about is, if you are not learning technological skills, regardless of what you have studied, if you're not learning technological skills, you will be at a distinct disadvantage over the next decade.
Vaibhav, you told us about how selling skills are becoming more and more relevant in today's world, and it will also, play a big role for professionals in this industry in the future. What about risk management, especially in the last year? Don't you think that risk management skills, whether it is in terms of client servicing or operations or investments, isn't it getting very important?
No, definitely, Vadini. And when I said sales is important, it's not like becoming important. Sales has always been important. It's just that most of the finance students, when they are studying finance, they generally don't realize that, how important marketing and sales are, including me. I was much against these subjects, but now with the job, I realized that how important these things are. Now coming to the risk management, compliance, regulations, and all these things, very important in a country like India, basically, because and I'll connect risk management with a little bit of compliance and regulations as well, because our country is evolving, and the finance industry, the investment industry, and we see that kind of rules and regulations are evolving almost like very, very fast. So SEBI, RBI, these regulators will keep coming up with new regulations, and one need to be abreast with about or whatever is happening. And I'll connect the risk management aspect again, because this is one of the most important, the kind of volatility we have been seeing over the last 1.5 years in the stock markets, and in the global markets as well, basically, not only in India. It is very important for the companies, for the investment industry, basically the brokerage houses, the wealth industry, to know about the personnel over there, to know about all these aspects, so that the client, the end client is basically, he's safe, your company is safe, because obviously breaches and regulatory breaches, basically these can be immense. So again, whatever aspects I spoke about finance industry in the last question, I'll add the risk management aspect to it as well, and say that it is equally important to be aware about all these things.
Okay, so are there any specialist qualifications? Because we did have a few questions on risk
FRM
management
actually focuses on risk management per se, but see, if you want to focus on the risk management, FRM is there, but then I have not studied FRM, so I don't know the basic details of the course structure and all, but even CFA covers a lot of aspects which are eventually, you can use into the risk management stuff. Otherwise, on the job, as Saurabh also mentioned, on the job learning is always there. I'll let other guys, other panelists speak about if they are aware about any specific courses related to risk management other than FRM, basically.
I think I'll second Vaibhav here. I think we really need to get beyond this this mindset, qualification law, job pow, right? That world is gone, where you have to just constantly mint qualifications. There's a lot of this actually in our society, because education is seen as a means to a job. I see a lot of people spending most of their 20s getting qualification after qualification after qualification. There's any qualification going, they're sort of working on it, right? And it's a completely futile road. You're not building skills, you're building qualifications. And if you're not building skills, it betrays a mindset that somehow if I get a qualification, I'll land up with a job. You do need a basic amount of, with those pizza analogy, you do need the pizza base. You can't sort of work with a, say, bread base. You need a pizza base to create an interesting dish. The pizza base is the undergrad education with something like the CFA overlaid on top of that. Once you have that base, the skill building is the topping. And the skill building is not going to come and going by minting a qualification out there. And employers, I think, are very clued on about this. That are we looking at a person who's a constant learner, who's a continuous learner, who's actually mastered learning as a skill? Or are we looking at a qualification acquirer who spends her 20s getting qualification after qualification, but doesn't have a skill mindset? So I would echo what Vaibhav said. If you are interested in a career in risk, get the basic qualifications in finance. See if you can find a job in risk. If you can't find a job specifically in risk, enter finance through one of the other avenues. And then if you're interested in risk, upskill yourself and see if in the firm that you're working in, a risk role opens up.
So, Nisha, you've told us before, but, Saurabh and Vaibhav tell us skills, qualifications are not important. You should build your skills. And you've also told us, Nisha, on why people should keep learning throughout. So what is the secret to building a sustained career, to have a long and successful innings as a finance professional?
Sure, Vardhani. I do reflect on Vidhu's comment on philosophy, but incidentally, this is also a reality. We all have had years of experience in the industry, and we have seen successes. We've learned from our failures. So things that have really worked well, are these aspects and perspectives that we probably are sharing. To your question on sustained career. Before I go into the specifics of few things that really matter on top of the list, I would say that there's a change in how past career models used to look and how new models look. I'd say past career models were very unidimensional or linear direction. Advancement in terms of promotion, upward mobility, and indicators like your achievement and salary or your social status really used to signify like you're successful in your career, you're moving up the ladder. The current and the future models are very different. They comprise a variety of options, sideways moves. You can grow vertically, you can grow horizontally. You can have a change of direction. I mean, I've experienced this all in my career journey. A change of organization, change of aspiration. And there's no single way of reaching success, hence it's multidimensional, leading to multiple criteria to success. Success is not measured only in terms of the compensation or the money or the social status. It's like inner satisfaction, it's like meeting your purpose, it's life balance, autonomy, etc. So the dimensions of how people can build career is very different from how we viewed this in the past. So going to the specifics, some of this will definitely be a repeat of what I already shared around how can you build a sustained career. Like 19 years of being in the industry, I feel that learning fades. So you continue to find new opportunities of upskilling, finding new learning opportunities. Focus on your strengths and build the expertise you need to develop your career and become a thought leader over a period of time. You have to invest in your development. We follow this 3E model, which says 3 E's indicates education, experience, and exposure. And I remember Saurabh was just talking about upskilling, adding skill, learning on weekends, spending your early 20s in learning. Learning is not just, again, a one way of learning, like you do a course and you learn. You can also learn through internships. You can also learn through mini projects. You can also learn through, finding somebody experienced in the industry and doing little opportunities with them. So keep learning at the heart and continue to stay a student all your life. Second, I think staying curious, have an insatiable desire to learn everything you can. And it's not just about the industry, business you're part of, but it's about yourself. So be curious and always stay open to new ideas, because global markets are changing. Global markets will continue to change. New technologies will continue to emerge, and our client needs, our industry needs will evolve. And the world will never stand still, and neither should us. So always ask yourself, what have I learned from you today? And stay curious. That curiosity helps you learn more and more. Third, I think, is a very key aspect. It is building on your purpose. We have seen, research has shown that when employees match their personal passions, strengths with company's purpose, they're more satisfied, they're more productive, and they have a higher successful career in their companies. And lastly, a very big factor in my successful career journey is professional networks. Continue to build your professional network both inside the organization and outside the organization. These networks provide resources, learning opportunities, meaningful way of networking here, networking in the industry people with your clients and developing your capabilities. So there's a long list, but these I think have really proven out to be very well, when I reflect on the sustained career.
Okay, that's great. I think we've had a very good discussion. We have about 5-10 minutes for a few questions from the audience. But before that, Vidhu, there's a request from the audience to repeat the YouTube channel that you had mentioned.
It's the CFA Society India's YouTube channel. So if you just put CFA Society India in search, you'll get all those videos.
Okay.
And you can search for career webinars.
Okay. So we'll take a few questions from the audience. One of the questions is on advisory, investment advisory. So someone is asking us the future of advisory in India. For example, Indians are just waking up to paid advice. So this person is asking us, how can an advisor charging a fee distinguish himself? Anybody would like to take that?
Look, I'll take that. So if you look at this aspect of RIA, I think on the SEBI website, there's probably 1,200, 1,300 registered investment advisors there. The regulator has changed the regime for RIAs. It has, as I think, as the person asking the question is saying, it is now fee based, and there's a cap on the fees. You'll have to distinguish yourself on the uniqueness of what you bring to the table. So, in my 2018 book, Coffee Can Investing, I laid out both the problem statement for the investor community, i.e. say HNWs like us as we try to invest our savings, and the problem statement for the RIA community as they try to scout for clients. You'll have to bring to the table some degree of uniqueness in your investment advice philosophy. You'll have to build a brand around why your investment advice is not just unique, why it works in the Indian context, and that rather than what fees you charge, the uniqueness of your advice philosophy rather than the fees you charge will have to be the construct around which your franchise is built. I think there's a massive market out there, colossal market out there. If you ask me for high quality investment advice, the regulator is very interested in this area developing. And I can't think of too many other better junctures in Indian history to build an investment advisory franchise focused on mass market, both HNWs and mass affluent, than today. But focusing on the intellectual aspect of it, the IP aspect of it is central. And I've tried my best in my 2018 book, Coffee Can Investing, to lay this out. 15 days hence, we are publishing another book called Diamonds in the Dust about how advances in forensic accounting and advances in how to think about valuation of assets have given more avenues for analysts and investment advisors to distinguish themselves. So that's a more ambitious book, the one that's coming out 15 days hence. 2018 Coffee Can Investing, I would say, is the standard text on how a good investment advisor can build their franchise.
To add on Saurav's point, Vardhini, just one point. So Saurav obviously laid out how different investment advisors can distinguish amongst themselves. And completely my view to the question which has been asked as to what is the future of advisory for India, I think the way SEBI has been moving in the last 5-6 years, since 2013 when it first came with RIA regulations, and gradually I will be seeing. So I'm comparing advisory versus distribution over here, because till now, distribution used to be one of the kind of strong pillars as to how mutual funds and the PMSs are being sold. But gradually, what I am observing and what I feel is in the next 5-7 years, we will see the distribution aspect going, kind of reducing and investment advisory increasing, because people will understand the value of an investment advisor brings to the table. The only challenge which I am currently looking and currently facing with the retail investors more is that, so what happens in the distribution, let's say I'll just take an example of a mutual fund. When you are paying, when you are entering into a regular mutual fund where the expense ratio is 2%, someone who is paying 100, only 98 gets invested. Nobody minds that. But if we say that, okay, give 100, in a direct kind of a fund, and like, let's say expense ratio is 0.5%, but give 1% to the advisor. Basically, he's paying lesser, but the mentality today, what I'm observing is nobody wants to pay anything above 100. So if you deduct from anything from 100, that's fine, but nobody wants to give over and above anything. Why am I paying extra? I think this mentality will change gradually, with the advent of technology and the more Gen Z population is coming and becoming more financially literate. I think advisory is here to stay and will be huge.
Okay. There's another question on the rise of passive investing and whether jobs in asset management would be impacted by this.
So I think if I was living in America, I would be more concerned about answering this question. I'm not so sure in our country it's as much of a concern. If you look at the data from AMFIs, from SEBI, from IRDA, whether it is insurance assets, mutual fund assets, whether it's an economic boom or a bust, assets under management grow at 15, 16% in our country. That means every decade, assets under management for the broader savings industry, I mean, including insurance in this context, assets under management for the broader savings industry typically grow 4x every decade. Top line for the industry grows at around 6x every decade. If in that context, alternatives, which are, sorry, if in that context, passives, which are barely 3-4% of the market, become 10%, I don't think too many people on this program, on this Zoom show, will should be worried about their jobs. The impact of passives would be greater in more efficient markets, such as the Western markets. In our country, neither the stock market nor the bond market is efficient, and hence the role of passives will be more limited, at least over the next 10 years.
There are quite a few questions interesting from students. They say, see, I'm nobody great. I'm an average student. I'm not from IIM, and I don't have any fancy degrees. So employers still look at institutions where we come from, whereas we are saying that your skills matter more. So this person is asking us, how do we balance this out?
Our startup is completely focusing on skill set. Vardhini, I'll be very much candid on this, in this channel, that degrees and which college someone is from, it does matter, to set the perception, but eventually it's the skill set, and we actually try to focus on that. So I could not say same thing about Deutsche and Edelweiss, because I was not setting up the processes over here. But over here, I can say at the startup that we are actually looking at the skill set rather than degrees and all. I'll leave it open to other speakers.
Yeah, I can add, Vaibhav and Vardhini. It's a very interesting question from people who are actually getting to the industry. The organizations and industries are evolving. Hiring managers and organizations are actually moving away from tiers. We used to have this term of tiering of colleges. Especially at my organization, we really don't look at the tiering of the organization of the colleges. We look at the roles. So we go and hire for the roles, whether it's engineering role, whether it is finance background. And, if you're not from a very high-profile institute, if you haven't done a very stronger tier 1 kind of a degree, please have belief in your capabilities and continue to upskill yourself. This industry has never been so open to diverse talent, being open to creating that culture and policies that help people advance based on your capabilities. So education of the degree that you're holding probably gets older, and more weightage is given to how much you can demonstrate your skills. So all you guys out here listening to this program, please make sure that that notion about tier 1 colleges degrees is holding less and less value and more around our skills.
And just to sort of round off what Nisha is saying, because it takes very little cost and effort now for employers like us to do online testing, right? So rather than asking for CVs, we just give a link to a test, 20-minute test, and if you do well in the test, we invite you for interviews. We're honestly not that fussed about what college you've gone to, what language you speak, which God you pray to. We're very concerned about, are you good on the psychometric tests that we're giving you? And that in turn is back to the skilling point. If you constantly upgrade your mental CPU every weekend, you will do better and better at these tests. Some of them are psychometric, some of them are around financial valuation cases, some of them are business analysis cases. And I think one of the beautiful aspects of technology is it's democratized access to opportunities. If you do well in tests, you get opportunities in life.
Okay, so we'd probably take one last question and then we can close. So this question, quite a few of them have asked on careers in quantitative modeling and in M&As, careers in M&As.
What was the last bit? Were they careers in M&A?
M&A, mergers and acquisitions, and careers in quantitative modeling. So how should one prepare for it?
Okay. So the quantitative modeling part, I'll give my 10 cents. M&A, I wouldn't know because I've never done a single M&A in my life. So on quantitative modeling, the way employers like us assess is we've got case studies that are preset. These are around data sets, and we make the data sets available to the candidate, and we look how adept he or she is in handling the data set and getting to a basic set of outcomes. We're discussing here people who are starting out their lives. So how adept you are in dealing with data sets will tell us how good you are at doing this. And one of the things I've seen is the people who do really well on these case studies that we give candidates are people who have taught themselves quant analysis rather than people who have gone and got themselves a formal qualification. Because people who have taught themselves, they could have taught themselves by reading up or doing online courses. There's a genuine mental engagement with the subject matter. They are hungry to learn, they have read, they have done online courses, and they tend to be very good on these sorts of exercises where we're looking for practical knowledge of quant analysis rather than spewing out of academic theories. And this links back to my point and about the point other panelists are making: build practical skills rather than going after qualifications. We are not interested in the qualification. We have data sets ready, which we give it to you, and how well you are at handling them determines whether we consider you for quant roles in Marcellus.
Okay. Anybody would like to take the question on M&As?
I'll add something on the quant. I interpreted the question as, today the field of quantitative finance and quant-based analysis, how the stocks are picked through your, quant-based models, momentum, factor-based investing, smart beta, and all are continuously increasing because, we have been seeing this kind of a trend in developed countries in US, UK for 5-10 years. And I believe that whatever happens over there in next 5-7 years comes to India as a fad, be it ESG, be it quant-based investing and all. So today I know a lot of people who are running fund managers who are running these kind of quantitative models to pick up stocks, where the complete skill set is basically how good and robust your data, your algorithm is, and using your past 20 years, 25 years, 15 years back-tested data. Obviously, you need to have that kind of a quant-based skill set, which Saurabh already mentioned about. Now, if a person is asking from the career point of view, I think there are few courses like CQF and all, which will, help people to learn more about quantitative finance. But again, the point is whether you want to get into that stuff or not before opting for getting into CFA or a CQF or an FRM is something which needs to be thought about by the candidate. On the M&A, again, I have not done many M&As, but one M&A I had done when I was based out of Australia. So I would want to just shortly differentiate between. So I was mostly into the equity capital markets where I was book running IPOs, as you initially told about me. But there was one transaction in the M&A which I did, and I know that what skill set differentiation is required between the two. I think I always felt in Deutsche that there can be a time when equity capital markets transactions can be automated to an extent, because they are following SEBI regulations. Tick, all the check boxes are ticked, okay, and then obviously some human elements are needed. And most of the IPOs are similar. I mean, the process that they are run are basically similar. But in M&A, all the transactions are completely different. You need to bring in the synergies, the novelty factors, and all. So that is a little nuanced, little niche and specialized roles in M&A, what I can think about, and will continue to be. And it needs a little bit more about, financial modeling and knowing about the financial kind of skill sets you want to, So that's my limited point on M&A as well.
Baba is right. So the entry-level M&A jobs anyway are not going to involve you doing the negotiation. The entry-level M&A job will be your doing the target valuation, the target analysis. And those are skills that, say, a CFA charter or indeed the Indian CA will also give you. So if you can do target valuation, then you get your foot into the M&A career ladder.
Sure.
Yes.
Okay.
Yeah.
Okay. So on that note, I think we can close. So thank you all the panelists for your time, and thanks to the audience for turning out in good numbers on a Sunday afternoon. Have a great day.
Thank you.
Thank you so
Thank you
much.
for having us.
Thank you.
Thank you.
Bye-bye.